Greetings everyone, welcome aboard. Happy Tuesday to you guys. It's January 25th, 2011, the 25th of January, guys. I can't believe it. I feel like we were just in December last week. We've got the end of the month coming up. Right now, the first month of the year, right, the month of January, this is a really important time of the year, guys. If you're a professional money manager, you're making sure that you're getting all kinds of new clients, new accounts, right? You're padding your numbers to hopefully solicit more accounts at the end of the first quarter. So for major money managers, this is go time, right? This is crunch time here. We've got FOMC tomorrow on Wednesday. We've got GDP on Friday, right? What we've seen so far is the first week of January is a waste of time. Second week of January is a transitional week, right? People coming back to the markets, right? Leaving their yachts, right? And their vacation homes, coming back to the markets for the first of the year. Now, the third week in January, right? Weeks 3 and 4, right? Weeks 3 and 4 of January, this is where we're starting to make that turn, right? Into the personality of the market that's going to be happening the rest of the year. So you can almost imagine, right? At the end of the year, the personality kind of cuts off, and then you get all the traders go on break. They come back after reading some new books. They come back after talking to their buddies, other traders. They come back early January and they begin to put together their biases or their plan of attack for the first month of the year. So we're dealing with a very transitional time of the year right now, and boy, what an exciting time to be a trader. We have the whole year in front of us, and we continue to have great days, right? Challenging days, I'll admit, right? This is somewhat of a challenging time of year. It's also going to get challenging at the end of the first quarter. All right, now my birthday's in March, so every March I always know we've got quadruple witching the third Friday of March, right? And so we now know after this first couple weeks of the year, now fast forward last week of March, right? The third Friday of March, that's going to be that quadruple witching. So that's going to be the next time we'll be dealing with a transitional area like this on our year of 2011. All right, guys, so understand where we are right now. It's more challenging because we've got a lot of traders today that are waiting for FOMC announcement tomorrow. We have a lot of traders right now that are waiting to see what did the quarterly GDP come out at. Remember, GDP on Friday is GDP from the end of last year. So we want to make sure we're aware just how big the magnitude is of these events coming on Wednesday and Thursday this week. So that's why we had the slow, choppy, sluggish dollar today. We saw sideways dollar, right? Sideways dollar. That's going to mean sideways on crude, on gold, on euro. Now, we talk about the dollar all the time. Speed, average true range, right? The overall candlestick patterns, right? Candlestick patterns tell a lot about market sentiment. Momentum indicators. We use the dollar charts the exact same way I use every other market that I trade, except I don't trade the dollar. I use it as a correlated market. So we expected another slow day today as traders are still waiting patiently for the FOMC announcement tomorrow, GDP on Friday. Now, as you can imagine, FOMC announcement, the dollar will be heavily correlated to that announcement tomorrow. So this morning, dollar was sideways. Now, crude oil was actually surprised today. We had nothing on crude today. Crude was dead in the water all morning this morning. A little bit tough to tell why. I'm sure a little bit has to do with the fact that we're waiting on crude inventories tomorrow. I'm sure a little bit also has to do with the fact there was no news today that applied to crude. And of course, we got FOMC and GDP. Also, of course, crude oil waiting for that as well. Now, we did have one trade on crude today. It was a nice wave pattern short at the end of the morning, and it really was a great example of how we trade a sideways market. So we'll grab a look at that for you guys in a moment. Now, gold, right? Gold, we always say gold is a trader's best friend, right? You thought diamonds were a lady's best friend, right? Well, gold is a day trader's best friend, and it was moving today, guys. Great work on this narrow trading range. Really proud of ourselves this morning because we did a great job at making lemonade with the lemons the market gave us. We didn't get big moves. We didn't get the final targets filled, but we made sure to place our targets properly and to capitalize on a less than desirable market this morning, right? When we see the market slow and sluggish, we take a different approach to how we manage our trades, which means conservative, conservative, conservative. We'll talk about that with our members tomorrow in our members training. So sideways on gold, right? Sideways on gold. We use this sideways market to our advantage. Now, you've probably heard me say this before, but I think sideways markets are easier to trade than trending markets. I know. Some people may think, well, isn't trending easier? Don't you just buy and then sell? Well, trending can be tough because where do you get in? Where do you get out, right? What about pullbacks and retracements? Where do you place your stop, right? Sideways markets, double tops, double bottoms, right? We sell the highs, we buy the lows, we avoid the middle, right? The chop zone. I think sideways markets are a lot easier to trade because they give us easy entries, easy exits, and it's really quite easy to watch momentum shift, watch the speed drop, watch the big buyers come in, right? Watching those three signs of price reversals, big money, speed, momentum, right? So we use those on sideways markets. So a very busy day today. Well, busy meaning we took a bunch of trades today, made some pretty good money, but the volume was still quite slow as we wait for price, or as we wait for traders to get back in the market tomorrow, right, during FOMC day. Now, as you can see here, right, 2, 4, 6, 8, 9 total trades. We usually average, for day traders, we usually average about 8 to 12 trades per day, so 8 to 12 trades per day. Now, these are all 4 contracts, and all of these trades were called live in the room. You'll also notice too, guys, below this video right now, I'm going to post the auto trader results today as well. Now, not sure how it did today. I'll check that out. We'll post the auto trader results for you guys below the video. All right. Auto trader, of course, comes with membership. We'll talk more about that with you guys tomorrow in live trade room. So as you can see here, 175 ticks. Now we had 140 ticks until our patience paid off, and right there at the end of the morning, see that last trade of the day, 11:30. 11:30, what is it? The European close. We waited for the 11:30 European close. We saw some volume enter the market, took our final trade of the day on the crude, locked up another 35 ticks. So we had one of our biggest trades of the day was on crude, and we had to wait for it today. So only one on crude, and then of course 8 trades on the gold. You can see a couple scratches. No losses today, right? No losses today. Did not make the same mistake I made yesterday. Remember that mistake I made yesterday, guys? Trading into resistance, right? Buying into resistance, selling into support, right? No, 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 no. We took notes yesterday. We reviewed those notes this morning. We learned from those, right, from those mistakes we made yesterday. And as you can see here, guys, we did a great job today as well. Weekly total now 2,800. Monthly total over 19,000. And of course, that's also your yearly total, $19,000 as well. We did 250,000 in 2010. We did 20K in December. And we did 45K in November. We'll keep you guys posted throughout the rest of the month of January. Now, here we are back in the dollar again. I know. It's like that movie Groundhog Day, right? Where you keep waking up and it's the same thing over and over again, right? Does that look familiar to you guys? Here's my dollar index. Here's my dollar index. Again, right, you could probably go back to yesterday's video and see the same thing. The dollar continues to sit here quietly. Now, why do you think this dollar is sitting here quietly? It's probably because of the news tomorrow. It's probably because of the news on Friday, right? Don't you think people will be waiting, of course, to see where the dollar's going to go? So dollar here now is resting sideways, and you can see here, get the highs here at 78,630, lows at 78 even. I'm going to watch the dollar bounce off the lows, watch it bounce off the highs, and guys, we have some easy tricks to the dollar, right? What are some of the tricks in the dollar we use? One of the tricks we use is we use our price alert. I'll mark the high, I'll mark the low, and then once I see the dollar break out, I'm going to get an alert. Right? My computer, it's a doorbell sound, right? The doorbell will go off, the price alert indicator fires off, and it tells us the dollar's moving. So one of the easiest ways, guys, look at your dollar. We see our sideways, right? I'm sorry, our bearish price channel. We break below the price channel, and now here we are going sideways. Whenever I see my dollar going sideways, what does that tell me for every other market I'm trading? Well, a sideways dollar means there's no directional bias. So sideways dollar means I can buy or sell on any other market. If the dollar was dropping, I would have a long bias, right? Dollar falling, crude oil, gold, euro, Russell, S&P rising, right? So if we did have some direction, I would say we had a bias. No direction of the dollar, which means I can buy the lows, I can sell the highs, I can buy support, I can sell resistance. All right? That's one thing we learned from a sideways dollar. The next thing is focus on the highs and the lows of this sideways range. So when I see the dollar test 78 even, or when I see it test 78,630, I know something's going to happen. Even if price came down, bounced off the lows, and went back up, it's still going to result in a selling opportunity on other markets. All right, so don't be afraid to trade these markets, guys, when the dollar is testing the lows or testing the highs. It doesn't actually have to break out. Another trick Another trick is to look at the average true range.